Hi, Crystal Harrison, Harrison Real Estate at Coldwell Banker Premier Realtors. Today, we're bringing you part 3 of our virtual homebuyer 101 series. In part 1, we discussed the pre-approval process. And in part 2, we discussed the home inspection process, which is one point in which you can back out of the contract and get your deposit back. The second time is should you not be able to produce a mortgage commitment letter. Now, in order to produce that mortgage commitment letter, one thing you'll need to secure is homeowners insurance. Most people will just want to secure the best price out there for homeowners insurance, but there's more to coverage than that, and you want to be sure you're fully covered in the best way possible. So today, we brought you an insurance agent who's going to give you some tips and tools and things to look for when shopping for coverage. We hope you find it insightful and helpful and gives you a guide on how to shop for homeowners insurance. Enjoy.
Hi everyone, welcome to our part 3 of our virtual homebuyer 101 series. Today we talk about an important step in the process, and this step is essential to getting that mortgage commitment. So it's something everyone has to do, and you really need it for now and your future. We're talking about homeowners insurance. And with that said, Aaron, I'm going to let you introduce yourself and your company.
Hi, thanks for having me on, Crystal, to this world-renowned show. If people are laughing in the audience, you won't be laughing in about a month when it is broadcast. It goes viral. Starkweather and Shepley Insurance. Thanks again, Crystal.
Great. So can you explain a little bit for buyers, what are some areas of coverage? Sometimes buyers will just go, well, I found the cheapest price and that's what I'm going to go with. But what should they be looking for in terms of their coverage as they're shopping around for homeowners insurance?
No, it's funny. It's not funny. It's a good question because that is something that comes up all the time. Just give me the cheapest policy. Give me the cheapest policy. And so I often say to buyers, you just made one of the biggest investments of your life. Mm-hmm. Let's do this right, because there's commercials on TV that say, you lost your whole assets, but you're only going to get reinsured for 2/3 of it. And while it may be funny on a commercial, it really does happen. And so let's take the time to do this right. There's some agents that say, let's just speed through this, but it's a big asset. This is not a 15, 20-minute conversation. Let's find out what's in your home. So some of the things that are really important to pay attention to are obviously what's called coverage A. So that's your dwelling coverage. How much is your home insured for? And that's always a sticky part of the conversation because people will say, I spent $200,000 for my house. I spent $300,000. Why are you insuring it for $400,000? Or why are you insuring it for less than what I bought it? And the simple answer there is rebuild value is not real estate value. So, for example, a home, let's say it's $200,000 in rebuild value, and the real estate value is $200,000 as well. If you take that same home and you put it in downtown Manhattan, it's automatically a $1.5 million home in real estate value. Or if you take it and put it in very, very rural, maybe it's $150,000. Mm-hmm. Either way, Travelers or MetLife or whatever company, it's still going to be $200,000 in rebuild. So that coverage A dwelling is important. And then there's other areas. Liability. That's one of the most important coverages on there. Most people think that it's just to cover you if someone comes to your house and slips and falls. But it covers a variety of areas. Do I have time to tell you a real story?
Yes, please.
So liability, it's what are you liable for? What did you cause? And liability is a coverage that extends nationwide. So quick example, if you go to the golf course, hit a golf ball, hit someone in the eye, which happened, actually talking to a client, they said this just happened to one of our friends, that person can sue you if you didn't take proper procedures to warn them. And so that can be very expensive. Well, your homeowner's liability will cover you even though you're on a golf course. Another real story, sad one, but true. There's a couple that went away on vacation for the weekend, and their kids decided they were going to do whatever they wanted to, got into the liquor, had friends over. One of the children drove away, got into an accident, and died. So hopefully these things never happen, but in the event that they do, having proper liability on your homeowner's policy will help pay for that lawsuit. And it's ridiculous to me when I look at some policies, because you can get $300,000 of coverage, which is what most agents are going to put on there, but you can also get $1 million, and the difference in price is literally maybe $50 for the year. For the year, $100 a month to cover you for so much more. And instead of getting so caught up in price, which most agents do, spend another $4 a month and get the $1 million. So just a couple tips to look for.
Yeah, that's a great tip, is that sometimes, what it does long term versus what it does short term is, just so important to look at. That $50 a year could cover you so much more.
So much more. So much more. One other thing I want to point out is something called extended replacement coverage. So let's say $200,000 it costs to rebuild your home. Well, 3 years from now, there's a forest fire in California, and now timber's at a shortage, or there's a catastrophic event that causes a lot of damage in the area, and now labor is supply and demand for labor is very high. Well, contractor is going to say, you know what, shortage in labor, shortage in materials, we're going to charge you $350,000, $400,000, $500,000. It's happened. You can get expansion coverages, which once again very minimal charge, but 25% extra. So now that $200,000 is now $250,000. You can get 50%, or you can even get guaranteed replacement. And once again, this charge is so minimal, but an important thing to have in your policy.
Great. Now, if buyers also wanted to, let's say, include like an engagement ring or something like that on their insurance policy, is that something they ask for now? Can they ask about it later? When would you suggest talking about that?
So a buyer can ask for it at any time, absolutely at any time. My best advice would be talk about it now, because with insurance, you just don't know when something or if something is going to happen. So it could be the day you move in, it could be the next day. But my advice is always just do it right away.
Okay. And then what should a buyer know about their home when they call you? I get buyers all the time that call me and are like, what kind of roof do I have? What kind of basement do I have? So what should they absolutely know when they give you a call?
So it's nice to know, and sometimes sometimes they don't know until they have the inspection. It's really good to know, like you said, roof. So material is good, but more importantly, what year was it last done? And normally, as you know, on the inspection, it's not going to be exact, but have a good time frame. 10 years left, 15, 5. So roof, plumbing. What are the pipes made of? Typically, insurance companies want to see copper or PVC, but galvanized steel, definitely don't want to see that. Wiring. When's the last time the electrical was done? Knob and tube, no good. Aluminum wiring, no good. Typically prefer 100 amps or better in service. And then obviously circuit breakers, not fuse boxes. And heating. When was the last time the furnace or the boiler was done? So typically 20 to 25 years, 30 sometimes, but when was the last time it was done?
Right. And then how long does it take from them saying, hey, I want to get this insurance, to producing the full binder to give to the mortgage company? What's that timeline like?
Oh, you know what, let me answer that. Can I back to that last question?
Yeah.
Because this is something that's part of my process, so I should have totally said it. Let's talk about the kitchen, the bathroom, the basement. What's the quality of those areas? And oftentimes the answer is always, well, the bathroom was just redone. That's good. But was it redone with standard materials, or was it redone with marble, granite countertops, cherry and maple cabinets? You have a very nice flooring, or is more standard materials? Both very nice. However, that affects the rebuild value. The basement finished or unfinished. One thing that's interesting is a garage. This is an answer where people sometimes will get this one wrong. Is it an attached garage or a built-in? Well, they can appear to be the same, but if there's living space above the garage, it's considered built-in. If it's not, then it's an attached, and that's greatly different. That greatly differs the replacement cost value. And then, what's a room that really sparks to you? And the reason is because that room may have something that has great value. Maybe there's crown molding, maybe there's cathedral ceilings. And so these specific areas that that pop, well, those have replacement value. And sometimes people say, I don't want to drive up the cost. It's so minimal,
Yeah.
but so long-term bearing to if something were to happen.
Well, and that's a good tip for my sellers too, because so many times I meet with sellers who say, well, I updated the bath. And it's like, okay, well, with what? Like, I like keep all of those details and all of those things so that, one, it just helps market your home better, and then two, helps the home buyer in the end because they're able to get better insured for the right products.
Absolutely. And
yeah, go ahead.
Question, but I went off on my my crazy.
No, go ahead. It's good stuff.
Yeah. The question was how long to.
Yeah. So let's say somebody says, "Yep, I've decided this is what I'm going to go with." How long does the process take from deciding to producing that full binder for the mortgage lender?
Getting the binder for the lender, can be 30 minutes. Can be 10 minutes. Literally can be very quick. I will say the process for the buyer that's really more important is how long between them giving me a call to me producing something. That is so preferably I'd like at least a week because that will allow me to be very thorough.
Right.
Part of my process is I'm going to go to your property card. So I'm going to interview you on the phone. I'm going to find out some of these things that we talked about. Dog, trampoline, swimming pool, things like that. In addition to what I've already talked about. Then I'm going to go to your property card. I'm going to cross-check a little bit. Look at the square footage of the home because that's a big driver, obviously, in replacement value. Look at the property card. I'm going to look at some pictures if it was a new buy. It is a new buy. So Zillow, Realtor.com, whatever, wherever I can find some pictures. And that will help in the calculator. Then I'm going to take that information and put it out at our company. We have over 20 different companies. So let's find out and see what pricing is out there. That may involve me making a phone call or two to an underwriter to try to figure out if we can insure and for what value. Now, that's why preferably a week is good. However, there have been situations where someone calls me the day of. And and it's like, okay, I got to drop everything. And it's been done, but that mad scramble is, it's doable. It's just not preferred, and it's better off for both parties involved when it's at least a week.
Right. And you actually just brought up something I wasn't planning to ask you, but you brought up a good point. Dogs, trampolines, play sets. Are those things that should be considered? I mean, as you said, I've seen it. My sister had someone over and their ankles sprained and, things could happen. Would you always recommend talking to a mortgage, a home insurance company regarding adding those things in?
Yeah, so those are going to be asked. The play set it's not typically, I think I've only seen that once. That's not really going to be asked if you have a play set. However, for liability purposes, you're going to want to make sure that that play set is, if there's other kids coming over, or actually, because it's considered a nuisance, an attractive nuisance. Mm-hmm. If a kid were to wander, just uninvited, but because they get more freedoms, and they don't have to be invited on, if they were to wander onto the property because it's considered attractive and nuisance, and something were to happen because of a deficiency in the playset, then you'd be found liable. So with playset, make sure they're safe. Make sure they're operating safely and not warped, no issues. With trampolines, insurance companies hate trampolines.
I know.
Allow them though. The ones that allow them want to see a couple things: a net around them, and also are they tied down. Some companies will allow one or the other, but preferably net and tied down. Swimming pool, that's definitely a question we're going to ask. If it's in ground, is there a fence around it? At least 4-foot fence and locking gate. If it's and is there a diving board? If it's above ground, once again, is there a diving board? Typically not on above ground, but maybe. But if it's above ground, is there a fence around the property and a locking gate? Once again, dog. So dogs are fine. Don't see any biting history in the last 5 years usually, but no biting history. And then you have your breeds that are typically not allowed. That being said, depending on a relationship with an underwriter or the company, some dogs like German Shepherds, pit bulls, they will be allowed if they haven't had biting history. And sometimes an underwriter may say, hey, Aaron, do you believe the dog is a threat? And I may say no. And pre-COVID, I have gone and met a dog before. And to see, is this dog treating me kindly? And now I've reported back and said, yeah, dog's fine. And that's important. I just want to go off on that because there was a situation where a client lied about the type of dog they had. There was then a dog bite, very bad dog bite, and the insurance company denied the claim. And those can get very expensive. Once you get a personal injury attorney involved, crazy lawsuit. But the insurance company said, no, we're not going to pay it because you told us it was, I don't know if it was a poodle, and it was actually a pit bull. And because you didn't disclose. So very important to be honest with those. And typically, if you're with the right agency, they will find a carrier that will cover you. Just don't need to lie about it.
Right. No, that's good advice. Do you feel like there's anything we missed, Aaron, that you want to let home buyers know or make sure they ask?
No, I think you covered it well with your questions. And just I would just say take your time when you're doing it. I said it earlier, the amount of money that you save, the amount of money that you're going to be paying for this home going forward, saving $50 a year, $75 a year is not going to be a big deal going forward. Now, I'm a consumer too. Obviously, I do this for work, but I'm a consumer, so of course I look at price. However, being an agent, I also see some bad claims. I mean, I saw a claim with over $600,000, electrical fire, and the home burned down to the ground. And I see the bad things that happen. It's funny, I've said to people, why as parents do we tell our kids, look left, look right before you cross the road? Something may happen. You don't know. But then when we're adults, we think we're invincible and nothing's going to happen. It won't happen to me. That claim won't happen to my neighbor. You never know. You never know. So might as well take the time, do it right. And I've said, when you're with the right agency, and there's plenty of them out there, they will find you good coverage without making you give them your whole wallet.
Right.
Just do your research, because if you settle on the first person, there's a good chance that you may not have found the right one.
Well, and it's worth, I always tell buyers too, it's worth shopping around even after you've purchased your home. Don't just think you have to stay with the same thing year after year. It's definitely worth, every year at least taking a look at it and seeing, should I renew? Should I go somewhere else?
It is good to take a look. It's funny, I was just having this conversation with someone 2 days ago. So that's part of the value of being at an agency with a lot of carriers. You can be in an agency and they have 5 carriers, 5 companies. When you're with an agency with a lot of companies, oftentimes, like our agency, we don't lose our clients. Do we lose clients? Of course. That'd be ridiculous to say we never did. But we keep a lot of our clients, because when you have over 20 companies, let's say Travelers goes up. Well, next year, we can put you with MetLife. Right. And the next year, we can put you with Safeco, which is owned by Liberty Mutual, and we can literally rotate. Typically not good to switch every year. Companies actually do end up rewarding for staying for a while. And sometimes there's a carrier where maybe they have a slight increase, or they have an increase, but it's because they were so low the previous year. Now they're catching up to the rest of the market. But it's a case-by-case basis, but I agree with you. It definitely is worth investigating.
Sounds good. So, Aaron, if you want to give everyone your contact information in case they want to reach out to you, that would be great.
Oh, thank you. So once again, Aaron Clark, at Starkweather and Shepley. My email address is aclark, so ACLARK, at Starshep. So instead of Starship, Starshep. That's STARSHEP